Hello traders, and welcome to my video on the bulls and bears ratio indicator. Okay, so in this video I'm going to show you how you can use this simple strategy to capture moves like this one for around 700 pips and this one here for over 500 pips. Okay, so this is a relatively simple strategy. I'm using the MT4 MetaTrader 4 trading platform. This is a euro dollar 4-hour chart. You can use this strategy on any trading platform, any chart time frame, and any trading instruments, so Forex, stocks, commodities, cryptos, indices, bonds, etc., whatever you prefer to trade. I actually prefer a higher chart time frame, so the 1 hour, 4-hour chart like this one, daily, weekly, and monthly charts, simply because these charts contain more price data and therefore I find the signals tend to be more reliable. That applies when using technical indicators such as this bulls and bears ratio indicator, along with price action analysis, candlestick patterns, support, resistance, trend lines, so on and so forth. And also when we can capture big moves like these for hundreds of pips, I'm not sure why you'd want to stress yourself out chart watching all day, trying to scalp a few pips on the 1 minute, 5 minute, or even 15-minute charts. You're just paying your broker more in spreads, commissions, etc. So this is a very simple strategy. As I said, the first thing to do is look for the trend direction. Okay, I'll just quickly go over the indicator here before we get to that. So I've colored it red for the bears power aspect of the indicator and green for the bulls, just to match up with my candlesticks, which are red and green. Okay, so basically red means bearish, green means bullish. Okay, the indicator, basically when the red line is above the green line, it means that the bears are in control. And when the green line is above the red line, it means that the bulls are in control. Simple as that. Okay. So what I do is I look for first the trend direction. So I can see here there's a nice level of resistance been formed. Okay, up here. And as I see the market, there's a nice level of support there as well. Okay, so it looks like the market's heading upwards. However, it runs into this resistance from back here. And then what happens is it breaks this support line. As you see there, nice breakout of that support line. Support line then becomes resistance. Have some indecision here and a slight pullback. But then eventually we get the breakout to the downside there. Okay, and that's when the bearish trend starts. And that ties in nicely with the red crossing above the green. Okay, so that's our signal, our bearish signal. I wouldn't trade every single cross of the red and the green, the cross of the bulls and bears in the indicator here, simply because if you do that, you can end up getting whipsawed in and out of the market. Okay, we first want to establish the trend, which is what we're doing here with our support, our resistance, and then we get our breakout and we're in a downtrend. Okay, so from then on, we can start looking for sell trades. Okay, so how do you do that? I hear you ask. Well, you can either trade on the first crossover once we're into this trend. However, you can see that the crossover does not actually occur again until the end of this move here. So what I would do is in a downtrend, I'd simply draw my support and trade a breakout of the support level. So nice breakout trade there. You can see from that breakout candle. Same here, nice breakout. Again, big breakout candle. Level of support here as well. Okay, strong level of support. It's breached. Support then becomes resistance. Market's still making these lower highs. Okay, so we're in a downtrend. Going to enter around here somewhere. 3 inside down candlestick patterns. That's a bullish candle followed by a bearish candle. Just zoom in for you. Bullish candle followed by a bearish candle, 50% of the bullish candle's body, and another bearish candle that breaks below the low of the initial bullish candle. Very strong bearish candlestick pattern there. So we can trade either on the breakout or the pullback. Okay, you also have bullish, bearish hanging man pattern there as well. So lots of bearish price action for confirmation. So any of these entries is a good time to enter early in the trend. If you are slightly late to the party, there still are other pullbacks, as you can see on the way down. Okay, level of support there, breakout. Same here, level of support, big breakout candle, no coincidence. Traders are watching these levels and trading them accordingly, looking to enter in on this trend. And even as far down as here, you have a pullback and a breakout, but you can see the bear's power in the indicator has started to decline. So when this indicator is showing divergence there to the downside, it can mean that the bear power is slowing down. As you see, we do have a turnaround there, and the market reaches this support level, starts to make higher lows, signals a turnaround, albeit a short-term one, but a turnaround nonetheless. And the green crosses above the red, so it's when we just would avoid trading. So this indicator can be good for determining the trend direction. So to help you decide which way we're going to trade, you can use support, as I said, to time your entry. The indicator doesn't give you entry timing, from my perspective anyway, but it can prevent you from entering. For example, you probably wouldn't want to sell after a big move like that, but you can also look at the indicator, see that it's quite choppy, so that would prevent you from selling in that instance, if you wouldn't, just by looking at the price action anyway. So divergence to the downside means that it's slowing down. You can see the bears are decreasing in value again. That was your confirmation. It's worth mentioning that the higher the red line or the higher the green line is basically the power of the trend, and the further away they are as well, the wider the trend. So we could have avoided, you see all this choppiness here. If you just look at the indicator, you can see there was no clear trend. They weren't wide enough. They were crossing amongst each other, so just spaghetti junction there. We would have avoided trading in this range, unless of course you're range trading. So you could actually actively seek out a situation like this if you're looking for consolidating markets that you want to pick the highs and lows off. But for me, I'm a trend trader, so I'm going to look for these lines to separate, the bulls and the bears to separate as much as possible. Shows me that there's a big trend, whether the red's above the green or vice versa. That tells us our trend direction, and then we can just time our entry on breakouts. Keep an eye for candlestick patterns, and of course use good money management. So talking of money management, if we took this trade here, or let's just say for argument's sake, we waited for the breakout confirmation and pull back, and we took this trade here when the lines are wider. Stop loss above the high, so around 15 to 20 pips. As you can see, over 300 pips on that move there, with a relatively tight stop loss, especially for the 4-hour chart. It's a really good stop loss in my opinion. And what I wouldn't do is like get excited and panic around here and just exit the position. Oh, 100 pips, great profit, exit. I wouldn't. Instead, I'd use a trailing stop. So when price drops to here, I'll just move the stop loss above this high. Maybe first to break even, then above this high. Then as we have a continuation downwards above this high, another continuation above this high, and just sort of trail the price all the way down as much as possible. So probably to around here. If the price then turns around and takes us out, we're still banked over 250 pips with a 15 pip stop loss. So not bad trading at all. That way, even if we do have a few losing trades, 3, 4, 5 losses in a row, it doesn't matter, because we know that eventually we'll capture a big trend like this and make back those losses and then some more. Okay, so that just emphasizes the importance of money management. And you can of course look to exit anyway when you see the crossover there. The bulls bears ratio indicator can be a very good tool for helping you time your exit if you hadn't already been taken out by a trailing stop or manually exited once you see the market start to make these higher lows. Okay, so ample opportunity to get in the trend. Don't sell at the low. Try to sell as early as possible, as high as possible, buy as low as possible. Ideally you want to take one trend. You don't want to risk re-entering. You can of course close part of the position on the way down just to bank some pips if you like. Okay, yeah, and then you can see here when the indicator again, we've seen this move upwards. However, it wasn't strong enough following on from this downtrend. Wait to see how it played out, and then you can see we have this big drop down and this wide distance between the bulls and the bears. So we could have started to look for our entry. Okay, and again we would have just applied the same principle. So it would have been move down, pull back, and then just enter on a breakout. You can see from that breakout candle there, potential entry, and they're still wide here, so we're doing the same. We're waiting for a pullback, and this breakout here, see from that big candle, traders are trading these levels, and could have been in here. That support's actually become resistance, so we may be locked in a break even here, just watching how this thing plays out. Okay, that's for a downtrend. For the uptrend, we just do the same principles but in the opposite direction. So we have our level of support here. Okay, it's held up very well. You can see we have this downwards move. Trend line is breached to the upside. Okay, change of market direction. You have separation of the bulls and the bears here. Okay, so this is our signal. Remember, when it's choppy like this, it's when we want to avoid trading with the trend unless you're range trading. Okay, so as they come apart here and the move continues upwards, just wait for the pullback. Clear and obvious pullback there. No coincidence, there's a big breakout candle. Traders are watching these levels and a potential entry. Not a bad entry there for over 100 pips. Okay, crossover back in the opposite direction. You know, you could have thought about exiting this trade if you hadn't already, as you've seen this consolidation in these lower highs. Okay, but another opportunity again if we just expand on that trend line there. Okay, you can see that after the price broke out of this channel. Okay, let's just get that drawn for you. See this channel here break out to the upside, then we have a continuation of that initial uptrend there. And again, what do we look for? We look for far separation, okay, to show us clearly that there's a trade. So far separation on the indicator there. Once we have that, we look for our pullback, remember. Okay, we get our pullback there, and we can trade on the breakout there. Perhaps even on this one, because this is a 4-hour chart, we could look at the more recent level of resistance, which would have been here. Okay, support and resistance, more recent, because there's still lots of data there. As I said, 4-hour chart, we've got the market making these higher lows. Consolidation and a big breakout to the upside. Coincided nicely with the bulls and the bears indicator, showing that the bulls are clearly in control. Okay, again, as that happens, if you miss the opportunity, another one comes along not long after, pullback. So you look at your indicator, you see the bulls are in control, market's trending upwards. Okay, you could look to enter long there. Okay. By now, if we zoom out, you don't really want to be buying up here after you've seen a move like that, because you could be buying at the high. I mean, it's still doable, but you just have to have, you know, impeccable money management. Let's just say you did trade that, you bought high there, which wouldn't have been a great idea in my opinion, but worst case scenario, probably a break even. As you see all of this price action, you probably would have been looking to get out of that situation there. And again, divergence, as you can see, the bull's power is just starting to make these lows. It shows that they're slowing down, okay, at the same time as the bears are increasing, okay. So this divergence shows you that perhaps there's going to be a change in market direction, and we've seen the shift confirmation down here. But zoomed out, I think is a clear way. You know, looking at this indicator, you can easily pinpoint these big gaps, okay. Just look for these big gaps, because they'll sort of help show you where there are areas of trends, okay. And then when you've got them, you know, okay, green's above, so I'm going to look to trade a breakout of resistance in line with the trend, and you can just even there as a trade. Okay, you've got this move upwards, resistance, pullback, breakout, resistance becomes support, continuation, so that's a good trade there as well, if not here. Okay, continue along, same thing again, big gap, green's clearly in charge, so we just drew our resistance in there. Look to go with, again, big gap, resistance, breakout, confirmation, big gap, green's above. So you just look for your breakout, either there or still there. I just put a line there, you can see nice wide separation. Okay. And you also had the bears power making these lows, showing that the bears are losing power. Okay, coming along, same again. You've got these gaps here. You know that you're in a strong downtrend because the red's above the green, so any opportunity to enter on a breakout in line with that trend, downtrend there, and of course here as well, as we've already covered. Just a simple way to use the indicator. Just look for obvious clear gaps and trade in the direction that the gaps are showing you. Okay, so that's something that you can do by looking at the chart yourself. To be honest, I mean, you can look at the chart, see there's been a drop there, which coincides with the gap, and you just got your support level breakout. You can enter there. Same here, big gap, green, so we're looking up. Resistance breakout. Okay, here, green, we're looking up. Resistance breakout. Okay, so ample opportunities, capture moves in trending markets using the bulls bears ratio indicator. Okay, hopefully that's given you some ideas of how you can implement this within your trading strategy. As always, remember, don't let negative emotions get in your way. Fear, anger, greed. Don't FOMO, fear of missing out trade. Don't revenge trade. Try to be disciplined, stick to the plan. And yeah, use good money management. Okay, and practice on a demo account as well, of course. Okay, hopefully that's given you an idea of how to use the bulls bears ratio indicator. I do appreciate you watching. If you can like and subscribe, that would be great. And hopefully I'll catch you on the next one. Thanks for watching. Take care.